Cathie, it's been said that you are in the toughest battle of your career right now. Not only are you fighting against the market momentum, you're also trying to halt huge losses and outflows. So I want you to address this for us. What is the message to investors here? Do you think that the street is just getting you wrong, or is it time to concede that mistakes have been made?
So let's put in perspective. You mentioned 60%, which is absolutely right. We have been in a terrible bear market for innovation. Hard to understand, but terrible bear market for innovation. However, if you look from the bottom of the coronavirus to that peak in February of 21, we were up 358%. Why? Because innovation solves problems, right? Now we're down 60%, and we have a whole new set of problems, certainly coming out of Russia and Ukraine. If you look at our strategy over a 5-year period, look at the last 5 years, I'm not quite sure what the numbers are, but they are well above our minimum hurdle rate of return, which is 15% at a compound annual rate. And I think over 3 years, we're closer to 25%. So that helps put our performance into perspective. You know, this is a period, if you believe in innovation, and that innovation does solve problems. We had a preview of that after the COVID crisis, when our strategies in the span of a month, many of the stocks were taken down 75% because either they were burning cash or they had low cash cushions. But guess what? Those were the genomics companies that were going to get us out of the coronavirus. And today, what do we have? We have all kinds of problems. The latest is Russia, Ukraine, and all of the commodities coming out of that area, especially hitting Europe. I think we're going to be looking at a lot of demand destruction and substitution into innovation. Electric vehicles as opposed to gas-powered vehicles would be the biggest one. We also have labor shortages all over the place. Again, automation. This is innovation at its best, and it's being turbocharged by this environment as the market is really hitting our stocks. So I think if you were to look at the next 5 years, and if you were to give us that 5-year investment time horizon, we are the closest you'll find to a venture capital fund in the public equity markets. If you were to give us that 5 years, given our expectations for growth in these new technologies, I think we're going to see some spectacular returns.
So what is the message to investors, though, who jumped on the ARK innovation bandwagon through the peak of the coronavirus, who are now looking at losses of around 50% through the course of the year? Pretty significant downside there and very hard to defend.
Consider the source, but what I do as an investor when I'm faced with a situation like this, where I have a high conviction strategy, I believe that innovation solves problems. I have a lot of problems. In that case, you average down into a strategy. And I have to tell you, you mentioned outflows. In February, we had inflows. And in fact, since January 17th, we've had significant inflows. So I think a lot of our investor base is averaging down. And as an investor, I've done that over my career, especially in innovation-related stocks. And you'd be amazed if you average down over time how quickly a strategy can come back above that average. And if we're right, significantly above that average over the next 5 years.
If you guys are interested in getting notification on what ARK Invest is buying and selling in any of their funds, you can sign up on their website. So every day I get a notification on what they buy and sell in every single one of their funds. So we have the ARKQ, ARKW, ARKG, ARKF, ARKX, and they sold a lot of stocks and they bought a lot of stocks. So the most recent sell was Palantir. They sold every single share of Palantir, as well as Skills, and they started buying Roku, they started buying Zoom. This is a 1 year chart of Zoom. Zoom hit a high of 406. This was July of last year, and now it hit a low of 107 just recently. They also bought Roku. Roku hit a high of 490 and now it's trading at 102. But they decided to sell Palantir. Palantir hit a high of 29.29 and they sold around the $11-12 mark. So say they sold at the bottom, but they bought at the very top. And then if we take a quick look at the ARKK fund, which has Tesla and all the growth stocks, we can see back last year in July hit a high of 132 and then now it's trading around $58. It did hit a low of 57.50. So they are expecting every stock in their ETF to go up in the next 5 years. Let me know in the comments down below, what do you think of this?
With this idea.
So we came up with this idea at the beginning of the summer. And really at that point you had, short interest in ARKK at about 2.7 billion. And plus we knew that the macro environment was likely to be challenging for speculative technology companies. So it just made a lot of sense at that point for us to launch the product.
We were talking earlier that a lot of folks have made this personal, not just about ARK itself, but about Cathie Woods and her approach. Is this personal for you?
No, not at all. I mean, we've got great respect for Cathie Woods. We've got great respect for ARK and what they've done. This is purely, they've created a whole new sector, really, speculative technology, unprofitable technology, whatever you would want to call it. And there's really no tool out there for investors to express a bearish view on that sector. So that was purely why we did this, nothing personal at all.
Have you talked to her about this? Has anyone from ARK contacted you?
They have not. We're going down to an ETF conference in April that she's going to be there. So, maybe, but not as of yet.
Let's talk about some of the investments. Just last week, as you know, she doubled down, in some ways maybe quadrupled down on the likes of Robinhood and Tesla. Do you look at that from an investment? And I don't know, when you look at your fund, how you think about the investment thesis or not, or your view is just, let the chips fall where they may. But do you look at that and say, this is a terrible mistake of an investment? Or do you say, great, we'll just see what happens?
So, there's certainly, whenever you are as transparent as they are with their trades, there's always the opportunity to second guess. We run some actively managed funds and, nobody, typically when you're doubling down on something in a bear market,